Hello and welcome. It is the 27th day of August 2019. My name is Derek. This is a Money Charts channel, all bets, trades, and of the like within each his own risk and their own reward. Another gold and silver video. This level of resistance here at about 17 and three quarters was hit here on August the 25th, both at the open, which is technically Sunday night. It hit it at 8 o'clock p.m. and it did so again at 9 p.m. Eastern Time, pulling back to the 18 average of lows. Always, I mean, this really does say a lot when I look at this as far as reading charts. You see it resisting back and forth. We see an attempted move to break it out yesterday morning at 9 o'clock. That failed. At that time, it failed. What it did do is it did another X hit at resistance. And then it comes back and it successfully corrects for a substantially long period of time. Little small attempt to break out here again last night at 9 p.m. That failed within it, part of the correctionary phase. A lot of attempts here at 2, 3 o'clock in the morning, but ultimately just coming back and continue to still show strength at the 18 average of highs post these two failed breakout moves. But this doesn't look like a failed breakout. I mean, it could, but it doesn't look like it. I'd be looking now for support to come in if it needs be at this time at 17 and three quarters. But that was the same thing here. If need be, let's find support. It didn't need it. Okay, so support at this key level. Congested there. Okay, well, support at this previous high and this congestion. That's what it did here. And in fact, it kind of almost an exact hit this low and this high. But definitely a clear break above this on the single hour term time frame. 15, we can see it started happening at about 7:15 a.m. Having a good run for about an hour or so, and it's just been congesting, settling in for the last, well, basically since this top near close to 8 o'clock. It's not. It's 8:52 a.m. Eastern as I'm doing this. Okay. Let's look at the daily chart. Leaving off from this Fibonacci level of 14, and from that bottom has been making nice pattern of higher highs and higher lows, uptrend. That's how it's defined. And amongst it, we can see in here that it pierces below the 18 lows, but when it exits it, big gain. And then we have the 18 lows test in here, exits it again, and a decent sized gain really up to the side. Very volatile day on August 13th. Oh, how does it react after that? Well, it stays in the sideways mode, support most certainly holding. And then when it tests this resistance area here a few days ago on the 23rd, or on Friday, it obviously beat the test, getting by both this double layer of resistance, and now it's had a good significant move above. So I look at the three little bears for a key leg higher. I want something that's not too small, not too big, just right. Now, as an owner and a holder, I'm fine with way too big if it does that. But this is now a just right move. So maybe we'll top and come back here. And I could say, I should say, probably. Does anything else suffice me to say that it could go higher on the longer term? On the 3 week chart or the 3 day. And what I'm going to do now is I'm going to switch this to the futures for two reasons. Number one, because I got more data and it's not as good for short term this market. I like that. It actually SLV is very good, or one of the better ones for the 1 minute. Maybe there's another fund that's better. I don't know, but I'm not too concerned on the 1 minute right now anyway. But as far as this on the 3 day, this has had a breakout above here, so a good size leg higher here as well on the weekly chart. Well overextended. And when it was well overextended here, it only had a little bit of a correction mode. It's now four candles in a row going higher from just this little small consolidation point. The second, even the first candle, it pulled back a bit. Second candle, it was up and down choppy, so it was like almost a sideways style move. And even this one had a little bit of a pullback. But yeah, from this low, definitely showing overextension. On the monthly chart, it's just okay. It doesn't really have much of an overextension here. It's just excitation and a clear one of that now. And continuing up here, that wouldn't be a surprise now. So it's got the capabilities of doing it, but it also wouldn't be a surprise here now to come back and test this little level of previous area of support as well. So after the monthly would be the quarterly, which would be the 3 month chart. And amongst it, 3 months just hanging in there, going sideways. A very good quarter. The quarter will end in September, so it's still live. There's another month. It's almost 2/3 of the way through of this period. And I suppose I could even go to the 12-month chart. I don't know how it's going to look on here. Yeah, it looks okay. This is the yearly chart. 1979, it was up 373%. Closing at $29. So since December 31st of that time frame, almost 30 years. 40, I believe. Yeah, 40 years. No, sorry, 40 years. If I subtract 2905 from 18, that's 11. So, uh, 28, 29, 30% down in 39 years. Just saying. It was down, of course, a lot more. As when we look at this, the price action in here, when all of this is you're looking at, and you don't know what happened before the fact in here, you most certainly would have had to know that the 18 was here. It would have been some sort of consolidation amongst. I don't know. Anyway, I'm not going to go much on it because I really would like to see data before. I know I'm saying I'd like to see data before here, and I kind of have 2 extra years before 1970. I have solid data from '68. Before that, it's kind of really rough. It's really rough sketch with the data that I have every year before then. Either way, market hits this top, has this move, and long, long, long consolidation within this, and an inflationary environment that gets at above it here, January 2004. That little bit of consolidation during the 2008 crash time. Just a beautiful 2008 candle, you can call it, because it was an outside year. Ever heard that before? An outside year in technical analysis? Maybe you've heard an outside day, but really an outside period more than anything. Because whether I'm looking at these charts on the yearly chart, the daily, the weekly, the 5 minute, they really do mean a lot to a lot within the same type of analysis. But when you have like several periods up, like 5 or even 4 periods up, we'll say, from here to here, a pause month, the outside, excuse me, the pause year, the outside year, and then you follow it with this nice green candle and then continuation. Really, what you got was a failed breakout because of getting to this high and then not successfully supporting in here. Now, of course, every time you get a failed breakout, you can have a successful correction, and that's what it's doing so far. It's just magic. But the 18 average of lows this month was 1351 and the low was 1362. It's only magic that it just happened to do. But for the last 5 years, we've been, and even, well, yeah, 5 years, we've been supporting this level. And really, it's just resisting, not shown the 18 average of closes. The 18 average of highs for the year right now comes in at 2297. And it wouldn't surprise me if it made it to this point. When we look at it right now, August, we're 8/12 of the way through, so 3/4, 2/3, 3/4, whatever. That means it wouldn't be a surprise. And then getting above it, well, that would just be a significantly interesting event. Okay, so we'll go back to these other charts again here. And actually, I want to go weekly. Actually, I want to go monthly. and just show more charts. So what's the whole point of being into silver? See, for me, when I look at, say, the price when it was hitting this resistance in here, I had no idea silver had a market. It would have been really, I would have really liked to have known it back then. Really wish I would have known that then. Maybe not as much in the years prior with the spot, because when I realized it had a market, I would have thought more about the trading game on the Wall Street side as well, too, especially back then. But as this period was going on, and that's because poker was doing pretty well. But as this was going on, I was finding it. Oh, fiat currency. I'd actually learned what the word fiat was. I remember back in college saying, "Hey guys, I have no idea what fiat means." No, I didn't say that. We were oblivious to how the monetary system, the money system, worked, and then the learning for it. And it's been this long, long, long period of time where more and more people are learning within the situation. Hence the reason why cryptocurrencies and really a more free market are going up. But the advantages of a non free market here, or if you believe prices are so manipulated low that 18 is like so amazingly cheap. Even when we look at how it's going, 28, 29 amazingly cheap. And I believe anything below 100 is cheap. And it's 18 right now, so it's like 5 times cheaper than that. Even when you include at least a 10% rake fee and buying on the premium, meaning you spend $20 US an ounce to actually physically buy silver. It's 5 times lower than 100. You're not spending 100. Why? I mean, unless even then, I mean, unless you want to buy this whatever collectors that's so amazing. And I I mean, myself, maybe I'd buy 187 maple. I don't know how much they're going for, but I'd probably try to spend less than 100 on that. And I don't even know what the market price on that is. But there's coins that would be really, really expensive. Now, within the content on this channel, as it going on, I mean, I talked all the way through about silver on the way up during this entire correctionary phase and into here. But as time went on, I reduced the amount of silver videos, and then this attempt I most certainly was covering this failed breakout, but especially in here there was a lot less covering of silver because, well, I mean, unless it's ready to do it, it doesn't need to do it. And even all the way in through here there was only a little bit. But it was a few months ago I was saying on here I was expecting gold, silver, Bitcoin, Litecoin are all going up. And really, to the exception of Litecoin, they kind of all have. And Litecoin has pretty much been around the same price. I can't remember the date that I stated it at. But obviously, the prices have been doing just that. They have had significantly great gains. And when we take a look at this on the gold front, it's had spectacular gains as well. And I know I have the Fibonacci lines on the other one, but I can just draw just a resistance line for where the key level was. For we had resistance here originally back in 2013, but then it got downgraded as far as a number to this high, which technically got downgraded again to this area, and really that was it. This level represents the July high. It represents the area of this high and the congestion of this, and even the support of April 2013. Several months here where it resisted it, nice correctionary move. Another resist here, nice correctionary move. Another, this time instead of just a one quick move with intra period, intra month. So you only had like 1, 2, 3, 5, whatever, 10 days here. You know there was a whole quarter, 4 months resisting this area. So there was a lot of time when it was in the 1350 area, and it supported 1309. But then it did have a decent sized dip, making a few lower lows from this low and this low. But it ultimately was a failed move below the 18, filling the empty space to this higher low, and definitely to this one here, down to the 1060. And then another little test of this level, a small pierce below, but good correctionary phase. And then on this one, break it. When you have a good break it, you expect a significant move thereafter. And it's been a concise move. A little bit of a pause month in July, But August has been a clear, concise move to the upside. I'm going to switch it up to this for the shorter term. There's that Fibonacci line in there right now showing a good move above it. On the 3-day chart, I like this consolidation that it's having. On the daily chart, a little bit of a weak period. Okay, oh, this is like whatever name you want to give it, where it goes, has a nice line up, and it just closes pretty much right at the open. Maybe a small gain, small loss, exact break even, it's all the same. But pretty much at the open, well, it's bearish. Well, maybe, but where did it come from? 8-hour chart. It's just been a little bit of a consolidation so far. It might need more. It hasn't even caught up to the 18, and it didn't even touch this line yet. At least not on this exchange area here. Now, of course, it's in that process. It could still easily and probably still will. But there's a big difference between the gold and silver. This is gold on the single hour. Let me show silver on the single hour term. It doesn't look like that. No, no, no. It looks like that. And of course, just a fantastic break so far. Which means the gold to silver ratio is going to have a significant decline. I mean, I guess I could say ignore this volume, unless there's something I could do about it. And I can push this button. There was something I did about it. Okay. We have on the single hour term, the ratio was at 86.24. Now it's 85.15. So it reduced a little over 1 basis point. That's like a little over 1% of a move in 2 hours. On the daily chart, well, excitation for real. I was talking about this in last night's video. I mean, we should at least have it tested this support and how. I mean, okay, this right now is not supporting this area. I mean, maybe it will. It's a pierce below. That could very much still easily be the case. We might congest in this area, and it becomes that. But that's a clear break. And how it consolidated within this area in here, this entire consolidation pattern is, I don't know. I guess I'll use epic for a lack of thinking of a better word, 'cause it's really not epic, but it's pretty cool. But you had 8 consecutive down days, with each day being the worst day being a good consecutive move, negative 5.8%. Everything was at least a 0.5% down. Yeah, the majority of the chunk was early, but good moves every single day, and 8 in a row. And that was from this high where gold, of course, kicking ass, grinding its way higher. This isn't really much of a grind. This is just a kick-ass move in comparison, because this low here was May the 6th, and it got up to this high basically on June the 5th, 25th. So 8 days down, or 8 days of what it got, was a differential of about 6 weeks going down faster than it went up. And then this consolidation phase, really starting on July the 31st, so all of August, originally getting up to this high, but never retesting it, establishing a much lower one, and then leaving it on August 23rd. So for the entire month, we still got 4 days left, but a good 3 weeks and more, 3.5 weeks. And it's now left it, not finding support. So going back to the short term, the 3 hour just breezing through that line, single hour, pretty much the same deal. 15-minute time frame, not getting the greatest of data moves, but from what I got in here, it kind of is 85.78. I'm going to remember that number because I might get a better number if I just do it. The 85.78. That's a little bit better. But as you can see, short term, there's nothing. Okay, so on the 4-minute time frame, it consolidated there for 3 or 4 periods for 15 minutes. It's just continuously still going down here live as I'm watching this now. I guess I could use this the rest of the way. It's going to give me the same result. But as it goes on the weekly, all of these higher lows in here, making this high, down to this low in here, okay? So that's what it's been doing. It's been making lows at or a little bit below. But every time it goes below, it really just barely goes below it. But that's not the case now. It resists this 18 of lows, doesn't come up to the highs, and now this week is, well, good bye-bye kind of deal. We're leaving it. Okay, so now I got to start talking about filling some of this empty space. And if you're looking at Fibonacci, okay, well, we got Fibonacci, well, from this high. And what low? I got this low, but I really don't kind of like it because I got this low in here. And then I got this low in here. So I suppose this is an okay one because you could get away with talking about key low, key high, key low, and key high because this was an obvious trend, that line that broke. And now we got this trend line here that's being tested right now. But I'm going to be using Fibonacci at 30 and a half and resistance at 93 and a half. So the numbers will come out, though the four digits will be, the four digits will be decimal term. I'm looking at the 70, when it's such a huge move, which this is, from point way down there to point way up there. The first number I'm looking at is the 76.4. That represents a 23.6% retracement lower. And that comes in at about 71.78. So that's got a long ways to go. But that does give me an area for where I think this could go to if we fill some of this empty space as its next target. Now, I don't have it on this calculator, but if you want to target before then and you want to use Fibonacci, well, there's two ways. Well, we'll do the second one here, which is Fibonacci from this low, because that gives you more of a short-term level. But the other short-term level way of doing it, because this is a 23.6% correction. Well, how about the 15%? That would be one, but I didn't program the 15% in this calculator. So I'm going to change this low again to match this, which we'll put in at 64 and a half. And 76 comes in at 85, 61 at 81. Well, 85 is where we are now. And what's the more of the exact number on here? Which is why I put the decimals in, 85.66. What's this? Let's just take a look at this low a little bit better. This is the weekly, so let's just change it to the 8-hour. I mean, there we are. We hit. Did I say 80? This is just too sick. 85.66. I mean, 85 point. Well, what's the exact low? 85.66. Okay. Interesting. Next target is 81.14, I guess. I'm going to put these lines in this one, just because I know how. Okay, let's do it on a different time frame. There we go. So 85.66 is the first one. Okay, if we break through it again, that's where I'd be looking at 81.14 as the next target. And if it just hits there in whatever way, it's only magic. It's not like it's going to happen, or it's not like it well, I'm not done talking like that. 74.33 is next. I'm going to talk this way. 74.33. If it breaks through that, we'll see what happens there, but that's just mathematically what the next number happens to be. And I'm not going to put the one below that in, at least not yet. But as technical analysis goes, and yeah, the line doesn't show it here, but obviously it's mathematical calculations for these highs and these lows. Um, they're again, you see it better when I did what I did before, show it on like a shorter term time frame. But as it is, it hits this level, resists this as it does for 5 or 6 periods, exits it like this. I'm very even if we do find support here, we come up here, it could be bearish. That's one of the bearish ways of finding support here, going higher. But if we don't, this thing could just keep falling to like 81. Next thing you know, you'd be seeing probably having spots where silver has 5%, 4, 3% days, and gold doesn't have anywhere near that. That will most likely be the way it's going to happen. Okay, I didn't think I was going to spend as much time on the ratio as I did, but it is as it is. It's got a long, long, long. I mean, this is obviously these are relatively short-term fib levels. It's got a long ways to go if it's going to fill any of this empty space. And as we can see it in here, we've had a breakout from the 18 average of lows in here in April of 2017. This level of resistance, it comes back. It does a lot of the grinding. Had a nice little okay move here, and then the one just recently. Really, if this doesn't, definitely a failed breakout if this is a key goes lower, because this was a significant move. It was just grinding before. And support was found at the 18 average of lows here. And now it looks like we're going to have to find it again. 18 average of lows coming in at 83.56. So that's another layer of support on the way to 81. Thank you for tuning in and have yourself a great day. Yeah, one more thing. Because I mentioned before, I didn't talk much about gold and silver over the last couple of years or so too much. That's because it wasn't doing much. And it's good to see that I can hopefully start showing it on a more regular occasion. I see the view counts over the last few days have been really nice for it. So that's pretty cool to see as well. I might put in another video tonight, but probably not unless something cool happens. But I'll probably continue on further with another gold and silver video tomorrow. Have yourself a great day. Bye bye.